Joe Biden says that he wants to raise taxes. Now, the question is, are higher taxes going to help you, and will they improve our country? What's up, everybody? I am Jaspreet Singh from theMinorityMindset.com, and welcome to The Minority Mindset. There's been a lot of craziness on the political side of things with Joe Biden winning the election, and then you have Donald Trump saying, no, I won the election. But like I've said before, I am not your political advisor. I don't have the time to sit there and be a keyboard warrior and fight over who won the election. My goal is to help you build wealth and be better with your money. Taxes affect your wallet. And with Joe Biden coming into office, chances are taxes and your taxes are going to go up. Now, I already made a video where I went into detail over Joe Biden's tax plan. So if you haven't seen that video, I will link it for you in the description below. Once I released that video of me going over Joe Biden's tax plan, I thought that was going to be the end of me talking about this new tax plan. But then Graham Stephan released a video about his response to higher taxes after seeing my video. And that video kind of inspired me to make this video where I go over my response and my reaction to higher taxes. If you haven't seen Graham's video, I will link that for you in the description below as well. Nobody likes paying higher taxes. I don't care if you're a Democrat or a Republican. I mean, paying higher taxes is like having to hit that thumbs up button below twice. It's also kind of like my Amazon membership. I don't like paying my Amazon Prime membership every single year, but I really like the services that I get from my Amazon Prime membership, so I keep paying it every single year because I like the services I get. I just don't like paying the money. There's a lot of people out there that say things like, oh, I don't mind paying taxes, or I wouldn't mind paying higher taxes. Yet I can't take you seriously if you say that, but at the same time you also have a 401k, or an IRA, or an HSA, because these are all tax-deferred investment accounts. The reason you're using these accounts are to avoid paying taxes legally. So if you really like paying taxes so much, why are you using a tax-deferred investment account? If you don't mind paying more taxes, then just stop using a 401k. That's when people say, oh, no, I shouldn't have to pay more taxes. Other people, rich people, should have to pay more taxes, which makes sense. I mean, if you and I both go to a massage parlor and you get a 60-minute soft Swedish massage and I get a really hardcore 90-minute deep tissue massage where the masseuse is like beating up my back and they're dripping bullets, I should have to pay more for that massage because I use more of their services than you did. In this case, that would mean I would have to use more taxes than you. But the question is how much more, because if you tax too much, then you make it harder for people to build wealth. You make it harder for businesses to hire more employees. You make it harder for people to survive financially. The government is not a for-profit entity. They make money when you work hard at your job, and the harder you work and the more money you make, the more money the government makes in taxes. When Donald Trump came into office, he slashed taxes for almost all Americans through something called the Tax Cuts and Jobs Act. Joe Biden led his political campaign saying that he wants to repeal Donald Trump's tax cuts and he wants to raise taxes, especially on the rich, by doing 4 different things. 2 of these things are going to change how much taxes you have to pay on your salary. 1 of these things is going to change how much taxes you have to pay on your investments. And 1 of these things changes how much taxes your business has to pay. I already dedicated 1 video where I went over his tax plan in great detail. So in this video, I'm going to very briefly go over the first 2 ways how it's going to affect your income taxes. And then I'm going to give my response to that. And then I'm going to go over the investment taxes and the business taxes and give my responses to that. I highly recommend you watch this video until the end because everything that I talk about is going to be like building blocks and they're all going to build on top of one another through the end of this video. Let's start by talking about income taxes because this is something everybody has to pay. If you go to work to make money, you have to pay income taxes, and I'm going to go through 3 different salary levels. 1 if you make $50,000 a year, 1 if you make $500,000 a year, and 1 if you make $5 million a year. Under the old tax plan before Donald Trump, if you made $50,000 a year, the top tax rate that you'd be paying was 25%. If you made $500,000 a year, the top tax rate that you were paying was 39.6%. And if you made $5 million a year, the top tax rate you paid was 39.6%. So the same as here. When Donald Trump came into office and he passed the Tax Cuts and Jobs Act, he pretty much cut taxes across the board, whether you made $20,000 a year or $20 million a year. So now under this new Trump tax plan, if you made $50,000, the highest tax rate that you'd be paying on your money is 22%. If you made $500,000 a year, the highest tax rate that you'd be paying is 35%. And if you made $5 million a year, the highest tax rate that you'd be paying is 37%. So you can see it's all a little bit less than what it was before. Under the Joe Biden tax plan, what we know for sure is that he wants to raise taxes on all people that make over $400,000 a year. So now if you make $500,000 a year, you can expect your tax rate to go up to 39.6%. And if you make $5 million a year, you can expect your top tax rate to go up back to 39.6%. The question is here. If you make under $400,000 a year, are you going to pay higher taxes or not? Because Joe Biden on one hand says that he wants to repeal the Trump tax cuts, but on the other hand, he also says he only wants to raise taxes on people making over $400,000 a year. So that's where there's a little bit of uncertainty, because if you repeal Trump's tax cuts, then everybody's marginal tax rates are going to go up. That means you're going to go from 22% to 25%. But if you only repeal it for people making over $400,000 a year, then you're not really getting rid of the Trump tax cuts. You're only partially getting rid of Trump's tax cuts. So this is where there's some uncertainty. Now, like I said in a previous video, this 22% number doesn't mean that you're going to pay 22% in taxes on all $50,000. These are marginal tax rates. The way it works is on the first $0 to $9,800 that you earn, you are going to pay 10% in taxes. On every dollar you earn between $9,800 and $40,000, you are going to pay 12% in taxes. And on every dollar you earn between $40,000 and $50,000, you are going to pay this 22%. So when I say this is your top tax rate, what I mean is this is the top bracket that you're going to be paying. This is how marginal tax rates work. The second thing Joe Biden wants to do is increase Social Security taxes. The way Social Security taxes work is for every dollar that you earn between $0 and $137,700 from your job, you have to pay 12.4% in taxes on every dollar that you earn between $0 and $137,700. Now, if you work a job, not all of this 12.4% is paid by you. Half is paid by you, so 6.2% is paid by you, and the other half, the other 6.2%, is paid by your employer, your boss. But if you're self-employed, if you run your own business like I do, I have to pay 6.2% of Social Security taxes when I pay myself, and then I have to pay another 6.2% when I get paid. So in effect, I'm paying 12.4%, just in two different halves. But if you're not self-employed, then you're just going to be paying 6.2% in Social Security taxes because the other half is paid by your boss. Now, for every dollar that you earn between $137,000 and $400,000, you have to pay 0% of your income in Social Security taxes. And for every dollar that you earn over $400,000, you have to pay 0% in Social Security taxes. And again, these Social Security taxes that you pay are in addition to your income taxes. Joe Biden wants to change this by saying that for every dollar you earn between $0 and $137,700, you are going to again have to pay this 12.4% split by you and your boss. And for every dollar you earn between $137,700 and $400,000, you are going to have to pay 0% in Social Security taxes. But this is where things get interesting, because if you make more than $400,000 a year, Joe Biden wants you to pay another 12.4% in Social Security taxes, half paid by you, half paid by your employer. So the goal with these tax hikes is to make more revenue for the government. That way the government can provide more services, and because people say that rich people need to pay their fair share. Now, the interesting thing is if you just look at these income tax rates, this couple percent bump or this few percent bump here really isn't the end of the world. It really gets expensive over here though, because if you're making $5 million a year from your job, yeah, a couple percent bump in your income tax isn't going to really kill you. But another 12.4% tax, depending on whether you're self-employed or not, is hundreds of thousands of dollars in additional taxes that you'd be paying. But what we've seen happen time and time again is anytime you raise taxes, the burden of the tax hikes are felt by the lower class and the middle class, not the rich. I mean, you could change the top tax rate to 90%, and it's not going to affect the rich, because the higher you raise taxes, the more you incentivize rich people to find loopholes or create tax loopholes. Think of it this way. If gas prices go up a lot, what happens? People stop driving gas cars and they start driving electric cars. When you see gas prices go up, there's a lot more incentive for people to create alternative energies, because people don't want to pay that much money for gas. It's the same with taxes. Anytime you raise taxes, you increase incentives for people to now go out and find loopholes, because now it is more profitable to find a loophole, because if you don't find a loophole, you're going to have to pay way more money in taxes. Like in the case of people making $400,000 a year, well, if you're self-employed, you're no longer going to pay yourself a salary more than $400,000, because if you pay yourself a $500,000 salary, you're going to be subject to this 12.4% Social Security tax. So what are you going to do? You're going to pay yourself a salary of $399,999. That way you don't have to pay any Social Security tax here. And every dollar you pay yourself after that is going to be a profit distribution. That way it's not an income. That way you don't have to pay this Social Security tax on your profit distribution. If you still don't believe me, let's take a look at history. In the 1950s, the top tax rate was not 39%, it was 91%. That means for every dollar that you earned, over $200,000, you only got to keep 9 cents because 91 of those cents were going to the government in taxes. If the top tax rate is 91%, then the rich must be paying their fair share because the taxes are so high. So if you're making a lot of money, you must be paying a ton of money in taxes, right? Well, not exactly. It actually creates more inequality because now if you're rich, you have a lot of incentive not to pay those high taxes because it is very profitable to go out and find a tax loophole or create a tax loophole. That way you don't have to pay 91% in taxes. One of the most famous examples of this was Louis B. Mayer. He was a big-time film producer and he retired in 1951. And when he retired in 1951, his studio gave him a $2.7 million bonus. Now, this $2.7 million bonus was an income tax subject to 91% taxes. But he didn't want to pay 91% in taxes because that meant he'd be paying $2.3 million of that in taxes. So what he did instead was he hired a lobbyist, and then this lobbyist went to bat for him and he got a new tax exemption put into the tax code. That way he did not have to pay 91% in taxes and he only had to pay 25% in taxes, even though the tax code says that if you make more than $200,000, you gotta pay 91% in taxes. Oh, and what he did was 100% legal. And it wasn't just him. Studies found that the 1% actually were so incentivized to go out and pay congresspeople and pay lobbyists to go out and create tax exemptions that the top 1% who were supposed to be paying 91% in taxes were in effect only paying 16% in taxes because of all the money they spent in lobbying to create tax exemptions for the rich. The higher taxes are, the more incentives rich people have to go out and create tax exemptions. That way they don't have to pay the higher taxes, and that creates more wealth inequality because now if you don't have the money to go out and create a tax exemption, you're stuck paying all these high taxes while rich people are not. And so who bears the burden? The poor and the middle class and the upper middle class, while the rich don't have to pay it. The goal with Joe Biden's tax plan, I assume, is to raise taxes just enough so people don't feel incentivized to go out and find loopholes and create loopholes, so they just pay that little bit higher tax. But it's never so easy. I'm an attorney, and when I was in law school, I spent an unbelievable amount of time studying taxes and the tax code. And the tax code is thousands of pages long. You have one page that explains what the tax rates are, and then you have 2,000 pages going through exceptions to the tax code. How are the exceptions created? Well, taxes go up and rich people don't want to pay these taxes, so now you hire a lobbyist to create an exception. So who ends up paying the cost? Well, you have the poor, the middle class, and then the high income earners that don't have the money to go out and hire a lobbyist. So these are your professionals, your doctors, your attorneys, your athletes, and some executives. This is where people say, oh, the system is corrupt. We have to force people to pay higher taxes. But there's a lot more to it to that, and I'm going to get to that in just a minute. But before then, let's talk about number 3, capital gains taxes, also known as your investment profit taxes. Capital gains are the taxes you pay on your investments that you own for longer than a year. It's called long-term capital gains because you have to own it for longer than a year to get these special tax rates. So if you buy an investment for $1,000 and you sell it for $100,000 in 10 years, you made $99,000 of profit, but you don't have to pay your regular income tax that we just talked about. You pay these special capital gains taxes, and capital gains taxes are lower, which incentivizes people, or is supposed to incentivize people, to invest their money for the long term. Because if you are a very high income earner, there is an additional 3.8% fee that you'd pay, but in general, the highest tax rate that you're going to pay on your capital gains rates is 20%, no matter how much money you make. And if you are a very high income earner, just add an additional 3.8% to that. Joe Biden wants to change this. He says he wants to tax capital gains profits at your ordinary income tax rates. That was the tax bracket numbers that I showed you just a minute ago. So he wants you to pay higher taxes on your investment profits, But there's a little bit of uncertainty here because on one hand, we have reports saying that he only wants to charge you your ordinary income tax rates if you make $1 million or more a year. And on the other hand, we have people saying that he's going to charge you your ordinary income tax rates no matter how much money you make. So for this and this, it's uncertain. And if you make over $1 million a year, then you can expect to pay 39.6% on your taxes, which is about double here. Now again, this is if you make over $1 million in profit, not just $441,000. That is what we know for sure. Everything else is still a question mark. If you are one of those people who has more than $1 million sitting there in profit in your stock market portfolio or your real estate portfolio, this could be incentive for you to go out and now sell your stock or sell your real estate and cash in on the profits and only pay this 20% tax rate while you still can, or it's going to incentivize you to find a legal tax loophole. Like Graham said, one of the things that you can do is if you have $1 million of profit sitting in an investment, what you can do instead of paying this 40% in tax is you could take a loan out against your investment, and so now you'll have the cash in your hand from the loan and you only have to pay 3 or 4% in interest to the bank, but that's better than paying 40% in taxes on your profits. This is where things get really juicy when we talk about corporate taxes or business taxes, because before Trump, the top corporate tax rate was 35%. When Trump came into office, he changed it by bringing it down to 21%. But now Joe Biden wants to raise corporate tax rates from 21%, where's my blue marker, up to 28%. Big corporations have to pay 2 different layers of taxes. The way it works is, let's say this is you, gotta draw you a nice mustache, and you buy some chips from this business. Now, you spend money at this business, and let's say this business has $63,000 of profit in its bank account. Now what this company is going to have to do is they're going to have to pay corporate taxes. If they pay 21% in taxes, that means now they're going to have to send a $13,000 check to the government, and they're only left with $50,000 in their bank account. Remember, nobody has actually made this money yet. This money is just sitting in this corporation's bank account. Now, here is an employee that works for the company, and let's say this business wants to reward this employee for their good work, so they give this employee this $50,000. So now this employee gets a $50,000 check, but this employee has to pay taxes on this money. So now this employee is going to have to pay an additional, $20,000 in taxes, because you have to factor in your federal taxes, your state taxes, your social security taxes. So this employee is only left with $30,000, even though the business started with $63,000. The reason why they're only left with $30,000 is because the corporation has to pay this corporate tax rate, and then the individual has to pay the individual tax rate, and so you have to pay these 2 different layers of tax before anyone actually makes any money. This is where things get really dicey and kind of tricky when it comes to corporations, because when corporations are running, they try to keep a certain profit structure. And if they are not maintaining a certain amount of profit or money, then they're going to either have to lay off employees, or they're going to have to make wage cuts, or they're going to have to do something that way they can get the profits back up. So if you increase corporate taxes, you can see one of 3 things happen. The first scenario is if you increase tax rates for a corporation, that they're just going to increase this added cost and they're going to accept a lower profit margin. The second option is they're going to pay this higher tax rate, and then they're going to pass this cost down the line. Either they're going to do wage cuts, or they're going to lay off employees, or they're going to raise the price of your chips and the products that you have to pay. That way they can maintain their profits. Or option 3, this corporation is going to invest a lot of money into finding ways to legally not pay this money in taxes. You could hate me for saying this, but I have spent countless hours studying this. If you raise a corporation's tax rates enough, they're going to invest a lot of money to either get the tax code changed or find a way around the tax code. What happens is this company is going to say, yeah, we're making some money in the United States, but we're actually located in Ireland. And then they tell the Irish government, yeah, we have an office in Ireland, but we're actually owned by a company that's located in Bermuda, because Ireland has a law that says that if you have a company in Ireland, but you're managed by a company somewhere else, like if you're managed by a company in Bermuda, you only have to pay the tax rates of that somewhere else. Well, Bermuda's tax rates are, you want to guess, 0%. So now what happens is you take this money, you send it to Bermuda, Bermuda sends this money to Ireland, and then there's some other fancy stuff that happens where this money goes to Netherlands, and then the money goes back to Ireland. But in effect, you are making billions of dollars, and you're paying almost no taxes. This is a very simplified version of something called the double Irish Dutch sandwich, and this is something that corporations with a lot of money do if they don't want to pay this money in taxes. Now, these dollars, this money from America, is sitting overseas in some random bank account and it's not being used. Money only has value if it's used and it's deployed, because then people can have jobs and it can be used for people to buy houses. But if this money is sitting in a random bank account overseas, it's not doing anyone any good. What this also does is it hurts competition, because now if you're not a major corporation and if you don't have all the cash to create these fancy tax systems to avoid paying taxes, then you have to pay these higher tax rates while your competitors don't. So what this in effect does is it eliminates competition. The companies that are huge, that have all these dollars to hire the fancy attorneys to create these fancy systems, don't have to pay these taxes and their money is sheltered somewhere else. But the smaller companies that are trying to grow don't have that resource, and so now they have to pay higher fees, they have to pay higher taxes, and you are in essence eliminating competition by making it harder for the smaller companies to play. When Donald Trump cut the corporate tax rate, what we saw happen was billions of dollars that were hiding overseas came back into the United States because tax rates were a lot lower. But the issue was when corporations brought all this money back, they used that money for stock buybacks and they used that money to pay investors through dividends. So that money didn't really go into the hands of everyday people. It helped investors, but it didn't really help regular Americans. This is the issue that a lot of people had, and so what I would have liked to see happen, and I think a lot of people would prefer, is now if you say, okay, bring this money back, but you have to use this money to invest in growth, or you have to use this money to improve your community. If you do that, now if you're investing in growth, you're creating new jobs, you're hiring more people, and if you're investing in your community, you are taking care of your community and you're helping people who are not going to get that benefit unless they own your stock. But this is where I want to take a step back and really dive into the question of higher taxes, because the question is, who's going to use the money better? You or the government? The government says that they can use the money better, which is why they want to raise taxes, because if they get more tax dollars, they think that they can use the money better to improve the community. But a lot of people and a lot of businesses say the opposite. They say, if I had more money in my hands, I could secure my financial freedom without the help of the government, and I could help my community more without the help of the government. This is where we have to find a balance, because there is a need for public services. I'm not saying that there isn't. I mean, we need teachers, we need police officers, we need parks, we need these public services. That is a great thing, and that's a very nice thing to have in any society. But the tough thing is really finding that balance, because the way the government creates jobs and the way an entrepreneur creates jobs are two completely different ways. An entrepreneur creates jobs through efficiency. An entrepreneur will have to create value, they have to create a product, and their job is to be profitable through efficiency by running an efficient business, because the more profit an entrepreneur can make, the more money they can invest in growth, the more people they can hire, and ultimately the more profit they can make. So if an entrepreneur is making more profit, they can create more jobs. The government works a little bit differently, because the government doesn't need to be profitable. They know that they're going to continue getting paid no matter what, because they're always going to get taxes as long as you are creating a profit. So if you're making money, you're going to pay the government taxes, and the government can actually create more jobs by being inefficient. I live in a northern state and we don't have the best roads because we get a lot of snow, which means we have a lot of salt put on the roads, and so there's a lot of potholes in my state, while the states around me also get snow, they also get salt, but they don't have the potholes. The difference is the material that we're using in our roads. The states that are around me are using this more expensive material, which costs more money up front, but over the long run it saves a lot of money, because you only have to repair those roads every 10 or 15 years, but in our state, you have to repair or replace the roads every 5 years because we use a cheaper material. Over the long run, it is much more expensive to use our material because you have to keep paying to replace it, but the benefit of replacing the roads every 5 years is now people get to continue to have jobs. See, it's more inefficient, but people continue to have jobs because you have this inefficient process where you have to keep breaking the roads and keep repairing them. It's more expensive for taxpayers because it costs more money, but it creates more jobs because it's more inefficient. So you can create jobs through inefficiencies and efficiencies. You can actually create more jobs through inefficiencies quicker, but from a sustainability standpoint, you need something efficient to create a profit in order to fund these inefficiencies. So it goes back to the same question. who's going to use the money better, the government or the people? If the government has more money, they can create more government programs and government systems which are supposed to help more people. But if people have more money, then they can use this money to help build their financial future, and they can use this money to invest in their community and take care of people. And if businesses have more money, they can have more money to invest in growth and hire more employees and grow their business. Do you remember when the Red Cross was accused of only spending like 10 cents of every dollar they made in actual donations for charity, and everybody got really upset because there were claims saying that the Red Cross is using 90% of all the charity dollars that they're getting for advertising and marketing and paying their employees, and only 10 cents was actually being used to help people? Well, that's really kind of how the government works. The government has so many layers upon layers upon layers upon layers upon layers of systems and people. Helping people is great, and I think we should all encourage other people to give back and help their community. But the question is, what's the most efficient way to do that? Is it through paying more taxes and having the government creating more systems? Or is it through incentivizing people and incentivizing businesses to take care of their communities better? That's why it's all a balance. A healthy country needs tax revenue in order to fund its public services. But if you have taxes that are too high, now you are incentivizing inefficient services, because now companies and rich people are going to be using their money to hire lobbyists to create tax exemptions, which is not a very beneficial thing for society. And if the government has too much say, then you could see a lot more inefficient systems with not a lot of productivity happening. If you enjoyed this video, here's the video that I think you'll love. And while you're at it, subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. Joe Biden keeps saying that he's going to repeal Donald Trump's tax cuts, and Donald Trump's tax cuts cut taxes on pretty much all Americans across the board. So if Joe Biden repeals Donald Trump's tax cuts, that means the taxes for everybody will go up,